everyone, welcome to Buy Now Sell Now, the weekend edition. I'm Mubina Kapasi, and this is a show where we answer all of your individual viewer queries, get your portfolio addressed by our fundamental expert, and of course address the market, which has seen quite a violent week in the week gone by. So let's tell you all that we have lined up for you on the show today. It's a jam-packed show for you, and we'll be discussing lots of oil and gas stocks as we have received queries for ONGC, IOC as well as GAIL. And later on the show, we'll be discussing the portfolio of Vinod from Tamil Nadu. So let's get on straight with it and bring on board our experts then. On the technicals, we have Chandan Taparia from Motilal Oswal and Avinash Gorakhshekar on the fundamentals from Joindre Capital. Good. Welcome to the show, gentlemen. Thanks so much for joining us on Buy Now, Sell Now weekend. Let's bring on board our very first query. And in fact, we've received all our queries from Prakash from Bengaluru. His first query is on ONGC. Now, he says he's bought 100 shares of ONGC at 201 rupees per share. His question is that he's a short-term time horizon investor. Should he hold or sell? Well, certainly been in the news quite often for ONGC in respect to the oil behemoth that the government wants to create. Unfortunately, our investor is sitting on a loss. So let's get in a fundamental perspective first. Avinash, what would you advise him to do?
Yeah, Mubina, I think as far as ONGC is concerned, I think the investor should take a slightly longer term view. In the short term, I don't think there's going to be any major earnings trigger with crude prices ruling soft and realizations down for ONGC. I think the numbers for ONGC for the next couple of quarters are going to be quite depressing, and margin pressure would continue. As you rightly mentioned, the impending HPCL merger with ONGC is now being planned, and we yet don't know what is the valuation which is going to be worked out for this merger. But once this happens, ONGC will get a fair share of downstream assets, and that should actually re-rate the company in the medium to long term. So I would suggest that rather than booking a loss now, this is a frontline oil and gas company which gets downstream assets. So if we can hold on for the next 6 to 12 months, we could definitely expect a certain amount of re-rating, and that could possibly help him reduce his losses. So I would suggest him to put a hold on the stock as of now.
Okay, hold on the stock and also try to extend your time horizon from the short-term time horizon that you have currently. But on the technicals, Chandan, in case, of course, if he cannot move his time horizon, what would you advise him to do?
Yes, looking at the technical setup of the stock, it has not performed. In fact, the stock is in a range with negative bias. Recently, it has taken support near to 155 and bounced back, but at the same time, it is having multiple hurdle at 170 zone. So again, the same view, we are not suggesting to exit the position. At least he can hold on, follow the support of 155, and if this time it manages to surpass 170, then we may see a probable up move in the counter. So the range bound and the negative bias is visible in the counter, but as it's near to the support zone, so he can take some risk and stay on with the support level of 155 zone.
All right, now the next query that's coming in from Prakash is on IOC. 100 shares of that one purchased at 393 rupees per share. His question again remains the same. Should he hold or sell? And once again, he has a short-term time horizon. Avinash, would it be advisable once again to perhaps extend his time horizon when it comes to IOC? What's the outlook?
Yeah, Mubina, I think as far as IOC is concerned, I think the company posted a slightly disappointing set of numbers with GRMs lower than the first quarter of last year. Our sense is that with crude prices ruling soft, the second half of FY18 should be reasonably good. Their new refinery is also going to go on stream in FY18, and we expect that both top line and profitability should get a significant boost in FY18. The investor should actually look at a slightly longer term period, because in the near term the stock may not have any big earning triggers, but overall I would say the setup is definitely good for the company in the second half of FY18, and therefore one could expect a target price of around 450. At that point I think he should book out. At the current price I think he should hold on.
Okay, so a hold call is what's coming in on the fundamentals for IOC, but let's also understand the technicals then of the stock. And Chandan, how does the chart patterns look for IOC?
Yes, we have positive view on most of the oil marketing companies. However, HPCL and BPCL outperform all these three stocks, but comparatively this stock also have some positive strengths with the support of 390. If he's holding the position, he can continue to do with the same with support near to 390, and it has potential to head towards 430, 440 kind of zone. But if he's looking better return, then he can move to the Hindustan Petro, which is also having support near to 410 and has potential to head towards 460, 490 kind of levels.
Okay, so I think Chandan is advising that you do take an HPCL instead of IOC. And of course, certainly Prakash seems to be having a penchant towards the oil and gas stocks. He does seem to have a lot of exposure of that in his portfolio. Once again, GAIL purchased at 552 rupees, a recent result candidate. Avinash, on GAIL, what would you say about the Q1 numbers and what would you advise our investor to do?
Now, I think Mubina, Q1 numbers have been reasonably good. I think compared to a loss in the previous first quarter of last year, the company posted a profit of close to 1000 crores. And I think clearly going forward in FY18, looking at the kind of performance in the Q1 and the management commentary, the pipeline business and the typically and the petrochemical kind of divisions are going to do extremely well. We believe that FY18 should be a strong year for both these divisions. And I think if the investor can again hold for a slightly longer term, 6 to 12 months, because clearly in these stocks, the pattern in the short term doesn't look encouraging. So maybe in the medium to long term, he should be able to get a better risk reward. So he should hold on, but definitely in the short term, I don't see any near term kind of earning triggers.
Okay, that's the view coming in on GAIL. Chandan, last one in the pack, the technicals for GAIL, how does it look?
Yes, as discussed, we have positive on most of the oil and gas company. However, recently the GAIL gave the breakout above 380 zone but failed to surpass 390 and witnessed some profit booking decline in line with the market selling. So as of now, the trend is intact. I think the built up of long position we've seen in last couple of days, those are intact. So as of now, the support is near to 340, 345 level, and if this time it manages to surpass 390, then fresh leg of rally cannot be ruled out, which may take it to 430, 435 kind of level. So he can continue with the position with the support near to 340, 345. While if anyone is looking for the new position, then above 391 can aid for 430, 440 kind of levels.
All right, so that's the perspective coming in on all of the stocks that Prakash owns, all of them from the oil and gas space, and we have given you a technical as well as a fundamental perspective. We'll slip into a short break, and when we come back, we'll be addressing Vinod's portfolio, so don't go anywhere. Thanks for staying on with us on Buy Now, Sell Now Weekend, and that's part of the show where we answer your individual viewer portfolios. So today we'll be addressing the portfolio of Vinod. He's 30 years of age and he's based in Tamil Nadu, and boy, he does certainly have a lot of small cap and mid cap names in his portfolio. Let's run you through exactly what are the stocks and what is his buy price. Alankit Limited is a stock that he's purchased, 621 shares of that one purchased at 31 rupees. There's KCP at 97 rupees is where the stock is currently trading at, so he's losing some money over there. Omkar Specialty Chemicals, once again a loss-making investment for him because it's trading at about 75 rupees. There's Sri Pushkar Cements, Sri Pushkar Chemicals rather, which he's purchased at 122, Zealon at 44.50, and Tanla Solutions, another very small cap company, purchased at 49.47. And the last three stocks in his portfolio, Kesharam Industries purchased at 148 rupees, losing some money over there. Paper stocks 300 rupees of International Paper APPM. The 300 rupees of course is his cost price, which he's purchased at, and once again it's not being able to do much for him in terms of returns. And lastly, ID Parry Sugar Company purchased at 284 rupees. So Avinash, lots of small cap and mid cap names in his portfolio. There's absolutely no feature of any sort of large cap or blue chip company at this point of time. Let's start off with the first three stocks: Alankit, KCP Limited and Omkar Specialty. What would you advise him to do?
I think as far as Alankit is concerned, I think this is a small company which operates in the financial inclusion space. I think he should hold on. Prospects here are pretty good, and we could possibly see a price of around 45 to 50 rupees over the next 12 to 15 months. So he should hold on here. KCP is also another company which operates in the capital goods sector, has a large presence in the sugar sector. There has been a good turnaround in the company's financials. Here also I think he could hold on for the next 12-15 months. We could look at a target price of around 140. As far as Omkar Chemicals is concerned, I would believe that here the company has not actually delivered on the numbers. The stock price has come down quite significantly, and we don't expect any major improvement. I would suggest him a switch to Heidelberg Cement. Heidelberg Cement is a promising player in the southern market, and we believe that if the investor can buy the stock at the current level, he should make a price target of around 160 over the next 12 to 18 months. So here I think there should be a switch from Omkar to Heidelberg Cement.
Okay, so as opposed to Omkar, Avinash is advising you to rather switch over to a Heidelberg Cement. And Avinash, there's Sri Pushkar Chemicals, Zealand as well as Tanla Solutions, and all of these stocks are not being able to do much for him in terms of return. So what would you advise him to do?
Now, as far as Sri Pushkar Chemicals is concerned, again it's a fertilizer and a chemical company. Our sense is that here the numbers delivered by the company have been pretty strong, and we believe that FY18 should be a good year. He should hold on. I think he's already made a little bit of profit here, and we could look at a target price of around 240 over the next 12 to 15 months. The second stock is Zealand. Zealand again is a promising player in the education space. Again, in terms of earnings, we have seen a very strong traction for the last 2 quarters, and within the education space, this company is now emerging as a very strong player, a strong brand and part of the Z group. So I would say that if he can hold on for the next 12 months, he could look at a target price of around 55 here. And the third stock, that is Tanla Solutions. Tanla Solutions actually has a very extremely bad record as far as corporate governance and performance delivery is concerned. I think he's already losing money here. My sense is I think if he can get into some frontline metal stock like Hindalco should give him a decent return over the next 12 months. Our sense is that aluminum prices plus the kind of expansion Hindalco is putting up, he could possibly get a target price of around 260. So a switch from Tanla to Hindalco would be a better idea.
Okay, so I think Sri Pushkar and Zealand are buys or rather hold call, but Hindalco, that is something that Avinash believes you should replace your investment in Tanla Solutions with. And the last 3 stocks in his portfolio, then there's Kesoram Industries, purchased at 148 rupees, International Paper APPM, the only paper stock featuring in his list, and EID Parry at 284 rupees. Avinash, your call.
Again, in terms of Kesoram, this is a BK Birla Group company. Again, our sense is that if the investor can hold on for the next year and a half, he could definitely expect a moderate increase here. Although the coming quarters are going to be challenging, he could look at a target price of around 165 here. So the suggestion is he should hold on here. As far as the other stock, that is International Paper is concerned, now this is one company which is now an MNC paper company, which earlier was known by AP Paper Mills. The company's earnings have definitely improved, but the stock has not moved up. I would suggest, again, since the paper cycle is doing pretty well, most of the other paper companies are doing well, we believe that International Paper should also do well, and the investor can look forward to a target price of around 330, 340 here. Finally, as far as EID Parry is concerned, again it's a rural play. It's got a significant holding in in the Murugappam group of companies. So investment value for the group portfolio is significant. In most importantly, it's got a large presence in the sanitary ware as well as the fertilizer business. So I would suggest that typically fertilizer, sanitary ware and sugar, these are 3 components which are going to play quite well for the company in FY18. The stock should definitely do well, although it's underperforming now. We are looking at a target price of around 350. So here also the suggestion would be to hold on.
Alright, so there you have it, all the chops and changes that Avinash has recommended on your portfolio on an overall basis. Just about 2 stocks that he's suggesting you should replace. But do remember that this is only a model portfolio. Please do consult your individual investment advisor before you take any investment decisions. We'll slip into a short break at this point of time, and of course when we come back we'll be getting you some top picks on the technicals as well as the fundamentals. Welcome back. You're still tuned with us on Buy Now Sell Now Weekend, and it's time to address the markets because certainly it's been quite a violent week, not only for the Nifty but for the global markets as well. Full carnage mode on, and as you can see, in the last week we've lost almost about 3.5 percentage points and 1,000 points lost for the Sensex. The Nifty, mid-cap and broader markets have as well seen bigger carnage on the screens. The small cap index losing 6.5% and the mid-cap index losing 5.5%. It had to do with the North Korean tensions. It had to do perhaps with the SEBI clamp down on shell companies. Either which ways, many perhaps saw this correction as something that was on expected lines, especially given the fast and the furious way that the markets had moved up. So let's get in a technical call first then, Chandan. Many are touting this as perhaps a healthy correction, or that would be a question that I would rather pose to Avinash. But yes, first to you, Chandan, what would you have to say to the kind of technicals that we have seen in the markets in the week gone by?
Yes, talking about the market sentiment and the behavior, Nifty has corrected by around 450 points after posting is the record lifetime high of 10,137. It has been making lower highs, lower lows from last 4 to 5 trading session, and the short-term trend has got into the bear grip once it has broken the support of 992 head zone. It has also tested the support of 9710, and till it remains below 9780, 9800 zone, the market has potential to further decline towards 9600 level. So that weakness is clearly visible in the market as it started to form the lower top, lower bottom formation, and it also negated the high rise, high lows on the weekly chart, because after the run up of last 4 to 5 weeks, it witnessed the correction on the weekly chart, which indicates that now bears are getting some grip in the market. Talking about the other set of database, volatility index is up by around 33%, and that is near to its 6 months high level. Volatility index, which used to be below 12.5, 13, now is near to 14.8 and up by around 33% on this week. So which indicates that some negativity is visible in the market. Resistance are also shifting in the market, as we have seen jump in the volatility with decline in put call ratio. So if market manages to negate this formation of lower highs, lower lows, then only some stability would be baked to get a bounce back. So as of now, those who are looking for the bounce back move are suggested to trade only if Nifty sustains above 9780, 9800 zone, while on the downside I am looking 9600 zone as a major support for the market. And I feel if this correction takes support at the lower level, then many beaten down quality stocks can be taken for a very good return in short term point of view.
Yeah, and that's, I think, what most of the markets are really looking at, that now that the markets have actually fallen quite a bit, which are the stocks that one can really bet on? We will get to you in just about that in just a bit. But meantime, Avinash, a healthy correction is what people are terming this as. A good time to perhaps pick in on stocks?
Yeah, definitely, Mubina. I think the markets had actually moved up quite significantly in a very short time span, and this rise was largely driven by liquidity. Even today, the markets are clearly driven by the liquidity factor. Our sense is that possibly we could see levels of 9600 or even 9550 levels, because the way the markets have been going in the last few trading sessions, I think one thing is very clear: corporate earnings seasons has also been quite disappointing, with some of the larger frontline sectors like PSU banks and the pharma sector, where a lot of frontline pharma companies have actually posted disappointing numbers. So my sense is probably the SEBI issue of the shell companies plus the economic survey pointed out today that the roadmap for growth could possibly have some hangover effects. So clearly I think in the near term we could see a little bit of more selling. Probably around 9500 would be a good time to start accumulating, and then as Chandan said, value definitely would get discovered, and one should look at a slightly medium to long term horizon while cherry picking any of these growth stocks.
Okay, and that's what we'll help our viewers to do, really, for all those keeping their eye out on what they can purchase in this kind of a weak market. Chandan, over to you first on the technicals. For those traders and investors who have a short-term time horizon, what would you advise?
Yes, I've selected a couple of stocks which are having the outperform nature compared to the market decline. First, it is from the banking space, that is the Yes Bank. However, it has corrected from higher levels of 1877 to 1710 kind of level, but it is now forming some base and support is clearly visible. The stock is resilience if I talk about the major market weakness. So some buying interest would emerge here by looking at the major price pattern. So recommending to buy on long side with a stop loss of 1700 and expecting this stock to again head towards 1840 level. Second trade is buy on Petronet. We have seen buying interest in selective oil and gas space, and I think this sector is likely to get some buying interest because based on its price behavior. Market fell down for 5th consecutive trading session, but this stock managed to hold the multiple support of 200 zone. The stock has recently corrected from 230 to 200 zone and again providing the fresh buying opportunity with better risk reward ratio. So recommended to buy on a small decline with a stop loss of 200. for an upside target towards 225 levels.
Okay, so there you have it. Those are technical calls coming in on the markets. But Avinash, for those investors who are sniffing out for opportunities and who are looking for value buys, what would you advise them to pick on?
No, I think we would be recommending two stocks. The first stock is Capital First. We believe that Capital First is a Warburg Pincus promoted non-banking finance company and has actually delivered very well in the last 6 to 7 years. Most importantly, it's a key player in the SME and the MSME market, and the kind of financials it posted in Q1 clearly displays the strong balance sheet strength as well as the asset quality strength. Our sense is, this stock has also touched a high of around 780 to 790 in the recent rally and now has corrected to around 700 odd levels. If one looks at the kind of growth picture, the management is looking at a loan book growth of almost 25%, which it should comfortably overshoot this target in the current year. And most importantly, the profitability growth in the current year should be easily in the range of 25 to 30%. So, looking at the kind of price to book valuation plus the asset quality and the and the current management team which has delivered very good results, I would suggest that investors should actually look at buying this stock on every decline. We have a target price of around 820 here. The second stock is a housing finance company called Dewan Housing Finance. Again, a stock which is also in the F&O list but has been hammered quite badly. But if one looks at the financials of the company, it's a very strong player in the tier 2, tier 3 city market. Most importantly, the affordable housing factor plus the small city factor is going to play out for this company quite optimally. And again, in terms of asset quality, the gross as well as the net NPA levels are below 1%. Profit growth in Q1 was very healthy at around 30%. So, all said and done, this correction has come largely because of a sentiment factor. Investors should do definitely an optimal strategy of buying the stock for the next 12 to 15 months. We have a target price of around 550 here.
Okay, so there's Capital First as well as DHFL that Avinash is advising you should keep on your radar. Thanks a lot, gentlemen, then for joining us and helping our viewers out with your market picks as well as helping them out with their queries. With that, we'll wrap it up on Buy Now Sell Now weekend. Have a good weekend, and of course, we'll see you same time next week.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/ETNow.